Good afternoon, guys. Hey, my name is Ryan. If you've never been in one of my webinars, then welcome. Hey, what we're going to study today, we're going to study trend lines. Thank you guys for all showing up. There's a few things about trend lines that you may not know. First of all, can you hear my voice? If you can, just type yes in the little chat box there. And can you see my screen? Okay, thank you, Dylan. This is a little follow along guide. I put the link up here at the top into the little chat. We're just going to be talking about trend lines. Here's a basic overview. Basic overview of trend lines. You can go ahead and read it. We're just going to jump right into it. If you're following along, just pay attention. Now, a trend line, what is a trend line in trading? A trend line is drawn at the top of the highs or the lows of the lows. It shows overall direction. And you can see it just, looking here. Here's a horizontal trend line. And right down here is a diagonal trend line. Now, the horizontal trend line in trading, the horizontal trend line is used to show what's called support or resistance. Now, a support is kind of like a floor. If you live in, let's say, a two-story house, and you're walking on the second floor, you're not going to fall down to the first floor. Why? Because you have a floor under you. That's kind of like how a horizontal trend line is. Now, can price break down through there? Of course. But this shows where price has been, where traders could not push it down anymore, and then price bounces off and continues to rise or begins rising, forming a new uptrend or whatever. The same thing goes for resistance. Instead of on the bottom, it would be on the top. Like, for instance, this point right here may be a resistance point. Here is a standard diagonal trend line. All right, what we've got here, we have a trend line starting up here and moving all the way down. If you don't know how to draw a trend line, we're going to get right into that. Now, you need 2 points to make a trend line. You need the first point where you're starting up here. You need the second point, which is your, the second point. You can't draw a line unless you have 2 points, So you start here, here's your first point, here's your second point, and you just extend the line on out. Now, what does this do? When the line is extended on out and price comes back up here for the third touch of the trend line, this is where it gets interesting. In the vast majority, and we'll go over this in about binaries a little later, the vast majority of trend lines on the third touch bounce. Now, how often do they bounce? Well, that can be, I haven't done all the mathematics behind there. However, the vast majority of the third touch of trend lines bounce. For instance, if this was going down and price came up here, you see this one, it broke up through the trend line going up. This one did not bounce. However, I'm going to show you what happened after this line broke up through the trend line. This is called a trend line break, by the way, when price is going in a downward direction or an upward direction, if it's in an uptrend. Price is going in a downward direction, and then price breaks up through the trend line. Now, let's see, here we go. Standard trend line break right here. Now, if price breaks up through the trend line, there's a couple of things that usually happens, and I pointed it out right here. Number one, price is going to break up through the trend line at some point. We don't know when, but when that happens, price usually comes right back down. It might move up for a while, and then it will come right back down to just touch the trend line, touch the top of the downward trend line right here. You see the downward trend line, and price comes down to touch the trend line before moving up. Now, here's another type of trend line or support and resistance. It's called a channel. Now, when price is moving up, oh, by the way, I forgot to tell you, if you want to see these pictures a little bit bigger, all you have to do is right-click, copy the image address, and open up a new little tab. Just put it right in there. If you can't see the pictures big enough, you can do that, and then you can blow the screen up if you want to do that as well. While I've got that here's a channel. What a channel is, a channel just shows typical areas of support and resistance as buyers, in this case, are buying. Now, when traders spot channels, here's what they're going to do. If they spot a channel here, they're not going to put their stop loss, if they're buying, they're not going to put their stop loss, inside the channel. That'd be crazy. Why? Because volatility. What is volatility? Volatility, in a layman's terms, is price movements up and down how fast are they? How fast are they going? Right here, the volatility is remaining inside of this channel, inside the tops of the highs and below the lows of the, or below the lows. Like here's a low, and there's our 2 points, 1, 2. Where's our 2 points for our upper trend line? 1, 2. Is everybody following me along so far? Do you understand what I'm talking about? We're just talking about different types of trend lines and what they're used for. I'll blow this one up too. Okay, now this is what this is a triangle. Hang on, let me get a sip of coffee here. All a triangle is, it's a trend line. It's 2 trend lines. That's what it is. Right here, if all we could see, let me block out some of this. Hang on just a second. I want to show you something cool. You know, when we're trading, we can't see the whole chart. So what if all you saw was this right here? Could you draw that triangle? Well, absolutely you could. You got to touch right here. You got to touch right here. So you can draw this trend line and extend it out into the future. You got a touch right here and a touch right here. I mean, it's not absolutely perfect. You can move it up, whatever, I don't care. And then after price broke out of the upper trend line, or this triangle here, it goes up. And guess what? I'm going to show you something really cool about this here in just a second. But what is this? It's just 2 trend lines. That's all it is. It's a triangle. Now, what does a triangle tell us? Well, it tells us that traders are in indecision. They don't know whether price is going to go up. They don't know whether price is going to go down, unless traders begin trading that asset. And whenever they begin trading less and less and less, price doesn't move as much. If there's not as many traders trading, price is not going to move as much. So it gets smaller and smaller and smaller. And there comes a point when price is just so small that it's got to break out. It's not going to remain there forever. I mean, these are the markets. They move up, they move down all over the place. They're not going to remain right there. When it gets down into a small area right here, traders are going to hop back in the market and begin trading them. What they're waiting for the big push. They're waiting for price to just plow right out of that triangle. And that's when they're going to hop on board. What happens when they hop on board? You see this white arrow here? Price breaks out. It starts going up. Traders are like, what do they call it? FOMO, fear of missing out. They hop on board, like, yeah, it's going up, whoa. And then guess what? The market makers come back in and they're like, ha, 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 we got more money than you do. And they push price back down. Now watch the next picture. Here's something that is really, really cool. What if I just took this triangle that we were just looking at and I just extended the lines out to form an X? What happens there? Well, price still follows the trend lines. Price come back down to touch the trend line almost to the pip. Almost to the pip. I mean, come on. And then price stayed right there. And look what happened here. It broke that bottom trend line and just, I mean, freaking tanked. But what happened before it tanked? It went all the way down to the top of this downward trend line and stopped there and went back up because traders were buying there. Maybe not all the traders saw this triangle. Maybe some of the traders saw the downward trend line, and maybe some other traders saw the upward trend line. But no matter how far in the future, well, I'm sure if you like done it, you know, 147 years in the future, maybe it won't do anything. But no matter how far in the near future you extend your trend lines out, you know, a day, a week, a month, whatever, they're still going to follow the laws of technical analysis, which I don't think there are any laws, but, you know, follow the basic rules. And that's called a triangle. Now, the flag, this is one of my favorites. Copy image address, here we go. This is one of my favorites. This is the one that has made me the most money out of everything, I would say. I've not looked at it, but it's really, really good. It's called the flag. Now, before we start talking about the flag, let me ask, is everybody following me so far? Is there any questions you have about the content we have discussed so far? I will continue talking and see if there's anybody chat. If you have any questions, put them in the chat. Okay, this is a flag. Now, I don't want to hear a bunch of people saying, "Oh, that's not a flag, that's a pennant," or whatever. It's the same thing. I don't care if it looks like a triangle. Look, let me take a picture here. Okay, in a flag, what happens is price moves up, and then it goes sideways. That's your flag. I don't care if price forms a triangle while it's moving sideways like that, or I don't care if price forms just a standard consolidation. And I don't care if price, forms an upward, what do you call it, an ascending triangle or crap, there we go, or a descending triangle. I don't care. That's an ascending triangle. I don't care. What I'm looking for is price to make a parabolic move up, like it did right in this area, and then pause and get smaller and smaller, hopefully at the end. Because when that happens, when these two things happen, price moves up and then it consolidates sideways. Most of the time when that happens, price is going to continue up in just about the same distance that it moved before it moved up to this consolidation. Let me show you what I'm talking about. It's not going to be perfect. Nothing is perfect in trading. Watch. From here up to this area, we have about this much amount of movement. Okay, I'm not going to go into the pips, but from here up to here, it made about 2/3 of the way up. In a lot of cases, it moves it up. I mean, the exact amount. It's called a measured move. When a price moves up a certain amount, pauses, and then moves up some more. Now you can see measured moves all over the place where they add up exactly, but I'll tell you what happens a lot of the times. People will go in here and they'll finagle to be like, well, let me pull this down and then it'll be perfect. No, let me measure from here, from the top of this bar only up, you know. Hang on, somebody's calling me. I gotta get them off the phone. Okay, sorry people, don't know who you are. I'm in a webinar. Somebody from North Carolina. Okay, so, but that's called a measured move. You can see that all over the place. But the flag is very, very good. I want you, after we get off the webinar, I want you to go look and try to find these. There's a question. What is your screenshot software? Snagit? No, it's Jing. Let me pause and put this in here real quick. Jing by TechSmith. It's this one right here. It's free. I mean, anybody can use it. So there you go. Okay, so that's the flag. And these are all trend lines, support and resistance, things like that. Now, secrets most traders don't know. Shh. Actually, there's not any secrets out there. None. I mean, there's all kinds of stuff all over the internet, but there's really no secrets. Trend lines are relative to the chart you're looking at. Always look at the daily chart to find direction of the overall trend. Never, ever base a trend on a 5-minute chart. Okay, look, when you're trading a chart and you're looking at, well, here's a daily chart right here. You see this daily chart? It's moving up. It's not in the best uptrend. I mean, we got a double top up here, but, you know, it's moving up. It's made a correction. It's made a base. It's still in an uptrend. We can see that the uptrend is a bit wobbly, and you can see that here. I mean, it's not moving up perfectly, but it is still moving up. We got higher highs and higher lows. Now, where would be a good buying area since we're still in an uptrend? And below you can see an hourly chart. Now, right here, you can see this hourly chart, but look what happened on the upward trend line. Price came back down to the trend line and broke it. Now, price broke down from there. However, if I'm trading solely on a daily chart, and I may take that trade, and you know, I may put my stop somewhere down here below the lows, but guess what? This low right here is still inside the volatility zone. It's above the trend line. You don't want to put your stop here if it's above, if it's inside the trend line. Why? Because the volatility can come down, snag your stop, and continue moving up. The trend line or the uptrend will still be in place, but you won't because you got stopped out. So we're going to talk about how to do this with binaries here in a minute. Let's see here. Okay, here's another quote unquote secret that a lot of traders don't know. Um, okay, whenever I started trading, I learned that, and I remember this specifically, this one guy, who I will not name, said, every time a trend line gets touched, it gets stronger. You know what? That's a bunch of bullcrap. It's not right. It's wrong. Hang on. Well, depending on how you look at it. But here's the way I look at it. How many touches we have here? We got a trend line. We got an upper trend line. We got 7 touches here. Now, at some point, every single trend line will be broken. Every one. You're not going to have an uptrend forever with no pullbacks. You're not going to have a downtrend with no pullbacks. Every trend line will be broken. Every time that price touches this, it's kind of like this. Pretend you're in your upstairs bedroom at your house again. And my son, oh dear Lord, okay, he's got this thing where he can't walk. He has to stomp everywhere he goes. And we got wood floors upstairs. So, I mean, it echoes throughout the house when he does this. He'll jump off his bed onto the floor, and I'll tell him, quit that, you know. Now, him jumping from his bed onto the floor is not going to do anything. He's not going to fall through the floor. However, if he, let's pretend he weighed 5,000 pounds and he did that. Well, the floor is going to hold. Eventually, though, he's going to fall through because the floor gives a little bit more. Those, you know, support beams are giving way. At some point, he's going to fall through the floor. Same thing with trading. When you're looking at a trend line and you've got touch 1, touch 2 to draw your trend line, don't even count those. I mean, that's your first 2 data points. But when price continues to touch and continues to touch and continues to touch, and you see all these touches, watch out, because price will eventually break down through there. The more times that price touches a trend line, the weaker that trend line is going to get. And it's not just standard. It's kind of like exponential. Like, okay, you got your first touch, you got your second touch, you got your third touch here, and it gets a little bit weaker. Then you got your fourth touch, and it gets a little bit more weaker. And the more touches, the weaker and weaker it gets. It's kind of like an exponential curve. This is used in the calculation of the Black-Scholes model for option pricing, and it can also be used to look at trend lines. It's exponential. The more touches, the weaker it gets. Okay. Oh, this triple T trading strategy, I started to write this, but here, I mean, all it is this. Look at multiple time frames. Look at daily, hourly, 5 minutes. Look at monthly, weekly, daily. Look at, you know, look at the daily to find your trend. You got to look at the daily. If you don't look at the daily, you're not going to get the overall trend. You may be selling when the overall uptrend is up. You know, who knows? So just look at multiple time frames. Now, counter exchange strategy for counter exchange crap. Here is a strategy that is perfect for counter exchange. There we go. I can't talk here. Now, does anybody know what an inverted trend line is? All it is, it's the top of a channel or the bottom of a channel. Hang on, let me go back up here. See this top of the channel up here? That's what it is. An inverted trend line would be, if you're in an uptrend, it's going to be on the top. If you're in a downtrend, it's going to be on the bottom. Probably like right here, an uptrend, we're on the top. Now I want to show you 2 pictures. I want to show you that one, and I want to show you this one. Okay, on the first picture here, let me blow up my screen a little bit. On the first picture here, the same rules go. We've got trend line touch 1, trend line touch 2. Okay, that's all we need. Now, on an inverted trend line, the vast majority of the time, I don't have the exact numbers, haven't done the math, haven't been able to calculate it into the tool suite yet. However, the vast majority of the time, price on 1 bar only, let me take a picture of it. Price on 1 bar only will finish under that trend line if it goes up to touch it. Now, here's what excites me. We're looking at a 1 hour bar right here. We're looking at something that counter exchange offers, the Euro USD. And we're also looking at a bar that the vast majority of the time it closes under the bar. Does anybody know where I'm going with this? We got 1 hour bar right here that closes under this area right here the majority of the time. And guess what? You can trade an hour binary on these as well. You just got to find them. Because if price comes up here to touch this area right here and there's liquidity available, why not short that or sell the binary for 50 or an at the money binary and watch it tank. Now let's look at the other picture here. Here is a downward inverted trend line. We got touch number 1, touch number 2, and on the touch number 3, look at this one. There you got two bars here. Touch number 1 came down. I mean, just this is speculation, came down and technically touched the trend line, but from where I can see it, it technically did not. It's within a tick or two. Anyhow, it did close up above there. Same thing with this one. This one actually came down and touched close up above there. 1 bar. I want to let you think about that for a minute. And when we get done with the webinar, go and look at some of these inverted trend lines and see what you think. See if they're worthy of trading. Now, that has been the webinar for today.
When my heart shuts down, I don't speak, 'cause behind the muffled beating I am weak. The earth is ripped with cracks beneath my feet. One word more, they become craters. One word more, they become craters. Oh, the wind in my head, it sings my song. To be a wanderer and to go home. Oh, the wind in my head, it sings my song. To be a wanderer, to be a wanderer and to go home. For a million years, tears were shed. Memories were layered softly